to the What Bitcoin Did podcast.
Hello there from Bedford. How are you all? I'm busy, very, very busy here, counting down the days to the launch of my new podcast, my new show, Defiance. The target is to get it out on Sunday, but I am at the mercy of Apple, waiting for them to approve it. So yes, if they approve it in time, it should be out Sunday. So looking forward to that. Anyway, welcome to the What Bitcoin Did podcast, which is brought to you by the Mighty Kraken. Without doubt, the most trusted place to buy and sell Bitcoin. I am your host, Peter McCormack, and today I've got an interview with Plan B discussing Bitcoin stock to flow. But before that, I do have a message from my amazing show sponsors. And it's time to welcome my new sponsor, Wire. And a big thanks to my buddy Michael Dunworth for sponsoring the show. I've got to know Michael over the last year. Every time I'm out of San Francisco, he comes out and meets me, buys me a beer. Great lad. So thanks, Michael. So whether you are a solo developer or a large team, if you are looking to simplify your user onboarding and offer your users an easy and fast way to purchase Bitcoin, then you really need to talk to Wire. Since 2013, Wire has focused on taking care of the heavy lifting in terms of compliance, payments, liquidity, so you can focus on building your core offering. Your idea could be the next killer app, so do not let the regulators kill it. To find out more, reach out to Wire or create a developer account at sendwire.com, which is sendwyre.com, wire spelled W-Y-R-E. That's sendwire.com, which is sendwyre.com. Also, today's show is brought to you by the amazing Dropbit, and the cat is out of the bag. One of you smart cookies over on Twitter noticed that Lightning is coming to Dropbit, which I'm going to be telling you about more very soon. Very exciting. It definitely is my favorite Bitcoin wallet. I use it all the time now. It definitely is my favorite mobile Bitcoin wallet. I use it all the time now, especially when traveling. And I'm going to be heading out to Ohio next week. My first time visiting it. I'm going to be in Cleveland, hanging out with the team. They've got an event on. So lots of cool things coming up there. Grabbing a beer with you Buckeyes. So have you downloaded it? Have you tried Dropbit? Yeah, come on. You need to check it out. It's absolutely awesome. They've got all the standard stuff, pasting addresses and QR codes, but they've got these neat features where you can text Bitcoin to your friends and you can even tweet Bitcoin to people. It is the Venmo of Bitcoin. I promise you, you'll love it. So go and check it out. It is available on the iPhone and Android. Just head over to dropbit.app, which is dropbit.app. And following my trip to Ohio, I'm actually going to be heading out to Los Angeles. I'm going to be at CIS on October the 15th, and the organizers, Joseph and Alon of GHV, have just launched a campaign to give everyone a free ticket to their conference. They are on a tear to spread mass adoption of Bitcoin and are literally paying you to get started. It's going to be huge. I'm looking forward to the event. I'm going to be hosting fireside chats with Travis Kling and Tim Draper. So if you want to find out more, head over to cis.la/WBD, how you can get a ticket and then come and hang with me at CIS. Okay, so on to today's show, and we have the amazing Plan B, a rising star on Twitter. I was out in Wyoming, and Trace Mayer gave a speech and was waxing lyrical about his work. So I'm sure you've seen him, 100 trillion USDs stock to flow charts. So stock to flow is a way of judging an asset scarcity, and right now, the asset with the best stock to flow value is gold, but not for long. Bitcoin is chasing it down, and with the halving coming sometime in probably May next year, Bitcoin stock to flow value will increase from 25 to 50, edging it much closer to that of gold. So with the halvings, historically, we have seen some major price action around them, and Plan B's prediction is no different from this one. He expects Bitcoin's market cap to reach $1 trillion sometime after the halving, which puts the price per Bitcoin at roughly $55,000, which in this interview, he actually says is a rather conservative guess. Anyway, I hope you enjoy this one. I know a bunch of you have wanted to hear from Plan B for a while, so here he is. If you've got any feedback on the show, you know you can hit me up. My email address is hello@whatbitcoindid.com. Also, just a couple of notes. As I mentioned, Defiance is coming. The first 3 shows are ready, hopefully launching this Sunday if Apple approves it. I've got episodes with Alex Gladstein from the Human Rights Foundation, Tae Yong Ho, North Korea's most senior defector, and information warfare expert Molly McHugh. Also, when I'm over in the States in the next few weeks, I'm going to be recording some more amazing shows. In terms of travels, I'm going to be in Ohio on the 9th and 10th for the Drop It event, and then heading over to Portland in Oregon for my first time. Looking forward to that. An event is being organised there, which is pretty cool. I'm then going to be in SF for a night before I head to LA for CIS, and then probably going to be flying over to Berlin for the Lightning Conference. Thanks, Stark, so thanks for that. And then I'm going to be heading back to New York for the Human Rights Foundation. So if you're in any of those locations, you want to hang out, then give me a shout. Anyway, got any questions? Email me on hello@whatbitcoindid.com. Plan B, man. Nice to meet you. Nice to get you on the podcast.
Peter, thanks for being here.
Not a problem. You've become a little bit of a star recently on Twitter, certainly. And also, I was out in Wyoming watching Trace Mayer give a presentation. He kept going on about you. So you've got a rising star here at the moment.
Thank you. Well, you had an amazing time in Wyoming. I followed it a little bit. Private jets, meeting Trace Mayer. Excellent.
Do you know what? I feel so fortunate at times with some of these things that happen. I mean, I don't think I may never get to go on a private jet again. It was my only experience. I was totally amateur. I drank most of a bottle of champagne and ate all the M&Ms. So you got to take advantage of these situations. But I'm back to normality to Bedford. But listen, look, thank you for coming on. Great to talk to you. I want to learn more about this stock to flow ratio. I saw it mentioned in Safe Dean's book, but it's something you've been focusing on a lot of time on recently. But before we get into that, just firstly, can you tell me a little bit about your backstory, like the career stuff that's led you to this point of being a Bitcoin trader?
Yeah, absolutely. It's a bit unfortunate. I'm an anonymous account, because if not, I could go much deeper. But maybe for now, I'm in traditional finance. So I work for a listed Dutch financial institution, and I work at the investment team, where we invest the balance sheet of this institution, and it's a big balance sheet, multiple asset classes, multi-billion-dollar balance sheet. Mainly focused on fixed income, so mortgages, loans, sovereign debt. And my background is a little bit more techy, because my legal background as well. It's structured finance, so making structures like securitizations, and also derivatives pricing. So that's my traditional finance background, if you will. And it's this investment point of view that I bring to the table.
Do you get involved in Bitcoin at all in the day job?
Only at the coffee tables yet. So, it's one of my wishes to be a bridge between the Bitcoin world, which I'm so passionate about, and the traditional finance world. But there is a big gap in between. It has to do with regulations, regulators, traditional mindset maybe, and a very new asset. But I'm sure that I can fill that gap, build the bridge, and that's one of my goals why I'm here.
Are you the Bitcoin guy at work?
Yes, I am.
All right, man. Well, listen, let's get into this. It's quite cool that you want to be that bridge. I've been kind of scratching my head at the whole institutions things recently, because there's certainly been a number of plays in the market. We have institutional custody, we have backed, we have futures with the CME and the CBOE, which came out, I think it was last year. Yet there's never been this huge take up. And I'm always kind of scratching my head and wondering why. And I still think it's too much of a weird concept for institutions to get their head around. I think it still feels kind of too risky, like it might die. Have you kind of thought about that?
Yes. I think most institutional investors see it as a new asset, an exotic asset with high volatility. And it's not a very, very big asset also. So it's a very small and thin market to trade. So I think within the institutions, there's people who are closely watching this, people with derivatives backgrounds, quant backgrounds, so the people who make the models and do the more complex math and statistics in those institutions. I think they follow it. Also at dealing rooms, especially in 2017 at the peaks, you could just hear the words Bitcoin and crypto buzzing around. So it's there. But yeah, it's small, it's new, and that's also why I try to write this stock to flow paper in words and language that the institutions understand. So risk, return, with a fundamental analysis approach instead of a technical analysis, which is more trading oriented. So yeah, I think that helps, and I think that's what we're seeing at the moment. That the stock to flow idea and the mathematics behind it are understood and recognized by institutions, and yeah, that could be a start for a discussion in their own language.
And it's a great paper. And you're talking about the Medium article, right?
Right.
Yeah. So is it 19 languages it's been translated into?
20 as of today. Yeah.
20. What was the 20th?
Poland.
Oh,
Polish.
wow. I mean, that's pretty cool, man. Like, it's a great paper. And do you know what? Other thing that's great about it, it's actually really accessible, even for somebody like me. It's very easy to follow. And I feel like after I read it, I'd come to a real kind of good idea of the value of scarcity in this. But let's break it down, because there will be people who've kind of heard about this. They're going to be seeing on Twitter, stock to flow. Some will get it straight away, some won't. Let's get into it. So firstly, where did your interest in this come from? Did it come from reading the Bitcoin Standard?
Actually, it was a little before that.
Okay.
The Bitcoin Standard came later, but it brought me on the stock to flow idea. But I was involved since 2013, when I was actively looking for hedges, instruments, or something that could protect assets against quantitative easing. That was in full play for a couple of years by then, and low and negative interest rates. So I was scanning the market for new products, new derivative kind of things to hedge and make use of this low interest. And that's how I came through the site zerohedge.com on this Bitcoin phenomena. And it was not until I read the white paper, which I think is also very accessible and readable also for a non-technical public. When I read the white paper, Satoshi Nakamoto's piece, it all clicked right away. So the 21 million supply cap, scarcity, and how can you do that in a digital world? Because I know, gold is scarce, and you have to dig deep into the ground to get it, but to mine it. But how do you do that digitally, where you can copy anything from photos to files and videos? Why not copy a Bitcoin? And especially since it is all open source and can be copied with the push of a button. So, yeah, but when I understood the digital scarcity aspect, I also understood that is worth something. And then the whole journey of how do you measure it, how do you quantify it, how do you make the relation started, and that's where Seyfedin's book, The Bitcoin Standard, played a big role, because it brought this stock to flow concept to my mind, which I already heard of before, but in a traditional commodity context, so gold, silver, and other precious metals.
And you were able to get over the fact that it wasn't something you can touch. There's nothing tangible with Bitcoin in some ways. You were able to just get over that straight away? Because that's where I struggled to begin with. The first time, I didn't take it too serious, because I was like, but it's not a coin, it's not a note, it's not a bar of gold, it's nothing tangible, it's just a bit of fun. I saw it more like just almost like gaming tokens.
Yeah, well, I can understand that, and maybe because I'm a numbers guy, that I understood that encryption, the mathematics behind the encryption, is really powerful. It's really. It was on the weapons list in the US, so you can play very powerful games with that, and so I understood it sort of naturally fit that the scarcity thing would be locked by encryption on the one hand and a peer-to-peer network without a central power, so to speak, on the other hand. So yeah, I think that didn't bother me.
I think that's a problem a lot of people have with it, though. Especially with my friends, as I've been trying to introduce them to it, trying to get them their head around a concept of a digital money which isn't backed by any government, which just exists online. It's a massive leap for many people. Like, if you don't have a background of understanding, economics or math or cryptography, or if you're just like a standard person who does a standard job, I think this kind of the leap you have to take from traditional fiat money to Bitcoin, I think people sometimes underestimate that leap.
Yes, and what might also have helped is my background in finance. So the knowledge that our current financial system is also backed by nothing physical. So it used to be backed, of course, by gold and stuff, but it's since 15 August 1971, the US dollar is loose. It's on its own. So as soon as you know that and recognize that, and that combined with quantitative easing, where the money printing is going full throttle, yeah, I think that takes some of that fear away that there's nothing behind it, because it cannot be much worse than what we already have.
Yeah, I think most people have this fallacy that the fiat currency is backed by the government. They have this. They don't get into the weeds of it. They're just like, well, our government prints it and protects it. So yeah, surely this is real, and there is no government behind Bitcoin, so it can't be real.
And I think the book, The Bitcoin Standard, explains this very well. In fact, the first, 80% of the book is about the history of money. Mm-hmm. And I like that really much. And then the last 20% is about Bitcoin. But yeah, the understanding of money and what it is and where we went wrong. I shouldn't say wrong. I mean, the current money system brought us where we are today. It brought us very far. All the trade, all the stuff that happened the last 100 years. But I think this is it. What brought us here won't bring us there. So we need the next money technology, if you will. And this Bitcoin thing sure looks like it.
Yeah, it certainly does. And I discussed this with Trace in my interview that came out. I think it was even yesterday. I can't remember the releases now. But we talked about the fact that, we're not teaching money and finance in schools to kids. It's not being taught. But really, I think there's as big an argument, if not more of an argument, to be teaching this now as there is to be teaching biology and physics and everything else we teach. I
totally agree. Yeah.
So you have to teach your kids yourself, man.
Yeah.
All right, well, listen, let's get into this. Come on, explain what stock to flow is.
Stock to flow is a measure of scarcity. That's how I described it. When you want to measure and then model with that measure scarcity, yeah, how do you do it? You can look at the how much of the stuff is there, but the stock to flow ratio goes a little bit deeper. And it's not easy to really understand, because, for example, if you look at how much of the stuff is there for palladium or platinum, there's actually less there than gold. So you could say it's scarcer than gold. But stock to flow measures the amount that's there in years of production. So gold has 200,000 tons of gold are there in the world. That's the reserves. And the production, the yearly production is around 3,000 tons of gold. So if you divide the 200,000 by 3,000, you get about, or a little bit above, 60 as a stock to flow measure. There's a little bit more than 60 years of gold above the ground. And if you go a little bit philosophical about it, it measures in how far suppliers can inflate that stock. So do suppliers have an influence over the stock of a certain money or asset or commodity? And of course that's not wanted, because inflating money supply, that's exactly what happened in Germany in the 1920s with the Weimar hyperinflation. It's what happened in Zimbabwe in 2008, the same date that Bitcoin came around, and what happened in Venezuela. So one of the big risks of our current system is that the people in control, the central banks and the governments, can inflate the money supply. And I would argue that also the US and Europe and also Japan are all actively inflating the money supply as we speak. And we call that quantitative easing. So with gold, 60 years of supply above the ground, that is very, very difficult thing to do. So you can put twice as much equipment on there, twice as much money. Maybe you could even double the yearly production of gold, but still it would be very small compared to the stock. So in that way, you can measure scarcity, and that's what I used for the model.
Right. So interestingly, though, with gold, over the next 60 years, there will get to a point where it's going to become scarcer and scarcer.
For gold, you mean?
Yeah. You said there's like 200,000 tons available,
Yes.
3,000 tons a year is being mined. So over the next 60 years, like those last
Right.
those last kind of atoms of gold that were going to be mined. It's going to get harder.
True, but you see you see the production of gold increase every year. So if you look at the last 100 years, I think it doubled or tripled the production of gold because of better exploration, better mining, more powerful machines. So what you see is, in fact, that the stock to flow ratio of gold is about the same over the last 100 of years.
But ultimately, it will get harder and harder at some point.
Yeah, probably, unless the technology goes with it, and we can explore the bottom of the sea or some meteor or the moon.
Right. Okay.
So yeah, there's always that risk. But yeah, you would expect it will get a little bit scarcer, and stock to flow will rise a little bit.
Whereas with Bitcoin, we know it's 21 million. There won't be more than 21 million. And
Yes.
any attempt to increase the supply by creating a duplicate shitcoin has proved that it has no value. It does not even impact Bitcoin.
Yeah, exactly. And in that way, it's the first inelastic asset. So it's inelastic for supply. The supply is determined. Nothing can change it. So there's no risk, no uncertainty with that, and that's worth something as well. So yeah, that it will get scarce for sure.
Is there a collective belief system going on here as well?
No, I don't think there is. If you mean belief system as in money is an illusion, and if we believe it's money, it will be money. No, I'm not from that school. I think some things are really scarce, really better in their function to be money. So money also is not a thing; it's a function that certain goods, certain commodities, or in this case, Bitcoin can perform, and certain things are really better if it has a high stock to flow ratio, but also if it's durable, divisible, and the classical aspects. But especially stock to flow, if there is a good with a higher stock to flow ratio than gold, yeah, it is perfect for performing the function of money, and it will be used as such. That's my
Yeah, and the halvings play a big role in this. So in terms of Satoshi's design, his design was in a way which accelerated the value of Bitcoin. And Dan Hill talks about this as being a fantastic marketing loop for adoption. But you also talk about halvings increasing the hardness.
Absolutely, yeah. It's a step function. So every 210,000 blocks, approximately for a year, the subsidy halves. The amount of new Bitcoins in every block that's mined every 10 minutes halves. And in that way, it's pre-programmed. It's determined that the supply will approach in a stepwise function this 21 million cap. And I think, yeah, there's a lot of debate if it wouldn't have been better if that was a continuous function when we go smoothly towards this 21 million instead of shockwise every 4 years, this shock. And there is speculation if this was intended by Satoshi or not. Nobody knows. But with hindsight, I think it's very clever mechanism to, one, lock in the stock to flow. After this halving, you immediately see the miners with less coins, and that sell pressure that naturally comes from miners selling their coins to cover their electricity costs will halve. It's just a market dynamic that actually will change after the halving. But second, it also creates financial market dynamics that are interesting. People are going to speculate, our miners are going to get less. Will this be a death spiral? There was a narrative around last two halvings, which of course didn't play out. And other investors are going to speculate, wow, it's going to be scarcer. I might get some, and maybe it increases in value. So the whole dynamic changes also financially. And that is also very interesting because weak hands, if we, like we call them, the people that don't know and are uncertain, and they sell at those points even before the halvings. For example, right now, but strong hands, they pick them all up. You talk to one of the strong hands this week, Trace Mayer, He's the holder of last resorts, and there's more of him. So I think it's very good as to have a strong hands holding Bitcoin instead of weak hands. It's also with companies and shares. You want to have strong shareholders that believe in the company and that are not going to sell or react or ask all sorts of difficult questions. If there is one hump on the road, you want strong holders. So I think it's a good thing, the halvings.
My whole strategy now, after making many mistakes and having far less Bitcoin than I did at one point now, is that I rejected all shitcoins around, I can't remember, it was like 6 or 8 months ago. Decided to go Bitcoin only on the show, which was a great idea. I'm glad I did that. But also, I just sold everything. And one of the cool things that's come out of that is my Bitcoin holding has gone up since, because whilst I give some away, I tend to accumulate more than I let go. I've actually kind of stopped caring about the $/pound value on a short-term basis. I don't check the price anymore, actually, because I'm trying to play a much longer time frame. And what I've said to myself is, don't do anything for 3 halvings.
Yeah, same thing here. I think that's exactly the mindset you need for Bitcoin. It's, if you're playing the short-term game, can be very much fun, but I think it's better and more profitable if you play the long term and be there for at least 1 halving, but preferably 2 or 3 halvings. This is a marathon, not a sprint.
Yeah, and you've spotted a very strong correlation between Bitcoin's market value and stock to flow, right? But one thing I want to throw in there, and one thing that just sticks in my mind, I still wonder whether the Bitcoin price itself as a single unit is a psychological problem for people.
I don't know. You mean that it's $10,000 already, and that's high?
Yeah. So certainly on a level with my friends, like the conversation regularly is now is, oh, it's too expensive. Bitcoin's too expensive, because they see a unit price of Bitcoin at even like $10,000, $8,000. You know, if after the next halving we get to something like $55,000, I think psychologically especially within the retail market, it's going to be a tough pill to swallow. I think people are going to be like, I can't get on this. Is it too expensive? I'm a big fan of moving to more sats-based pricing, so people don't have that psychological barrier.
Yeah, I think that's a good thing, moving to sats instead of bitcoins. And what you're saying, I can relate to that. It reminds me of the time I bought my first bitcoins, and that was in 2015. And they were around, was it 400 or something?
Mm-hmm.
And at that time, I thought the same thing. I thought, wow, they are very expensive right now, and is this a good time to enter? But with hindsight, it's all about the return. It's not about how much it is. So what helped me was thinking in terms of return. And of course, I'm used to that as a professional investor, risk and return. But if you map those out, the average returns and the average risks, then it doesn't matter. It all that matters is that you enter, and you enter fast. Of course, it was much lower and cheaper a year ago, and it would have been better to buy then. But the second best time is now, or at least averaging in somewhere in the near future, if you want to go in, of course.
Tell me about this strong correlation, though, that you've spotted. What's the pattern that's going on?
Yeah, the correlation that I first spotted was with the market values of gold, silver, Bitcoin, and the stock to flow values that were related to that. So you see almost $10 trillion gold market and a very high 60+ stock to flow. And you see all those commodities with stock to flows around 1 and very low 10 billion, 100 billion range market values. So that was the first hunch that there was a correlation between stock to flow and market value. And then when you map it out, you get this weird high 95% correlation that you seldom see. I mean, in real life, I don't see that. But maybe it's also good to point out that it's not so much the correlation, but the co-integration that is interesting. And that's a technical term. I try to explain it. Correlation means that the two variables, so stock to flow and the price, move together. Stock to flow goes up, price goes up. And if that goes lockstep, you have a correlation of 100%. And 95% is, of course, very high already. But we also know if stock to flow goes up after a halving, price doesn't go up right away. It usually lags a little bit, and maybe in the future it will front run it, who knows? But it's not lockstep up and down. And especially in the 4 years period after a halving, the halving, it increases slightly, but the price can fluctuate wildly around it. So the correlation there is also not perfect. But what's even more interesting is the co-integration. Co-integration means that the difference between the stock to flow and the Bitcoin price is constant. Not constant, but the distribution is stationary. So they move together like if they're connected with a rubber band or something. So if the price can go far away from the stock to flow, but it will always return. It can go below the stock to flow, but it will return to the model value. And that's exactly what you see. So every single year, last 10 years, the actual Bitcoin price was above the model price and below the model price every single year. So that's what you can expect for the future. And it doesn't matter if the price goes right away after the halving up or half year later, it will go up. At least that's the hypothesis. That's also what the math and the statistics say. So I have very high confidence in that. But the next halving will of course be the big test, the big out of sample test for this hypothesis. But it's good to know that it's the co-integration and not so much the correlation that is interesting from a investment point of view.
Next up, I talk to Plan B more about stock to flow, but before that, I do have a message from my super amazing sponsors. And firstly, today's show is brought to you by my buddies over at BlockFi. Love these guys. And another month is over. So I've just checked my balance. My interest payments come in. And yes, I know some of you are against this. Some of you are not your keys, not your Bitcoin, and I totally respect this. I'm cool with the risk. I'm happy with some of my Bitcoin locked up in BlockFi, getting interest every month. And they've had all these cool updates recently. They've dropped minimum deposit, so interest account holders will no longer have to meet a minimum deposit amount for their Bitcoin, Ether, or GUSD balances in order to earn interest. Additionally, BlockFi has removed their early withdrawal penalty from the account, and they are now offering 1 free withdrawal per month for all clients. They also recently announced BlockFi Flex, where you can choose to receive your interest payments in the currency of your choice. And also, with a BlockFi interest account, you can earn interest every month in Bitcoin, ETH, and GUSD. Also, don't forget, they've also got crypto loans. So if you want to take out a loan, BlockFi have got you covered as well. If you're interested in trying this out, I do recommend you do your own research, then head over to blockfi.com, which is BLOCKFI.com. Also, today's show is brought to you by the mighty, mighty Kraken, the most trusted place to buy and sell Bitcoin, the best place to buy and sell Bitcoin. They're also sponsoring my new show, Defiance, and helping me launch Defiance News. So massive thanks, Kraken. Massive thanks, Jesse. Love you guys. Thank you for all your help. But if you're a trader, Kraken's got you covered. They've got the most comprehensive set of tools available for traders. They've got Kraken.com, which is the best place to buy, sell, and trade digital currencies. They've got margin trading with up to 5x leverage. They've got futures. They've got indices. They've got the badass Kraken OTC desk for large trades with private and personalized services. They've got Crypto Watch, where you can trade on multiple crypto exchanges from a single platform. And for you most advanced traders out there, if you're spending the big dollars, then they've got the best account management service that you could possibly ask for. There is no better place to trade than Kraken. There is no exchange with better security than Kraken. Seriously, if you're not trading with Kraken, what the hell are you doing with your life? Join me in supporting Kraken. Head over to kraken.com, which is KRAKEN.com. And you had a bold kind of price prediction after the May 2020 halving of around $55,000. So I'm trying to imagine in the cycle where that relates to, say, the previous halving. You know, there's been very key kind of price points. There was the kind of $1,200 price point we reached and then dropped. And then there was kind of like a time around 3,000, then the run up to 20,000. back to 3, and now settling kind of near 10. Like that 55,000, like, are you putting a marker against a similar trajectory from the previous halving? Like, is that the equivalent of the kind of the $1,200 run up, or is that the equivalent of the 20,000 run up?
Yeah, so the 50,000, which is actually a little bit conservative. So
Nice.
the parameter, yeah, I found it a little bit high myself, so I thought I'd better be on the conservative side. So I rounded the parameters to the downside, very round numbers in the model now. But if you and the data I used is until December 2018. Of course, we have 9 more months to put in there. If you use those, you get a little bit higher. So it would be the 60 to 90,000 range. And of course, I also have this new model based on yearly data, so less data instead of monthly data, which even gets us at about 100,000. But anyway, it's let's say it's between 50 and 100,000. If you look at past predicted numbers, it would have been after 2016 halving, the model predicted 7,000.
Mm-hmm.
So that's a conservative number again. You can compare that with the 50,000. And after the 2012 halving, it was a little bit above 700, the model value, which is pretty close.
See, the interesting thing here is thinking, oh God, how am I going to play this? How am I going to trade it? Right, if it hits that 55,000, do I then sell some, wait it to drop back down to 20 and buy in again? Or, and if it does that, then you see it shoot up. Maybe you were right, it goes up to 100,000. And I've come back to that conclusion that I'm just not even going to play it. I'm personally not going to try and predict or try and guess this game, because I think it's too complicated. I think this is why I go back to the, I'm not a trader. I make podcasts, I'll earn my income, and I will just keep stacking sats.
That's right. Yeah, and that's how I do it as well. I mean, the urge to trade is big, especially if you see those big swings around the model. But no, I think that the long game is the best game to play, especially for non-professional investors that don't have access to information or high-speed trading equipment. So, yeah, I would do the same. But let me add one thing for myself, but that's a very personal thing. If you made a 10x or even more, it's not a bad thing to take some money off the table to make sure you do something nice with it, or set yourself up for the bear market that will also follow at a certain time. But I would never sell it all. I would not run that risk, because you could miss the whole market up move. But yeah, there's no shame in selling a little bit once in a while if after you've gone 10x.
Well, it depends where the inflows come in as well, because we talked about there hasn't really been this institutional inflow, but the mechanisms and the infrastructure's there now if it does happen. So if the price does shooting up again and the media start covering it, any institutions who have an interest now have the infrastructure required to invest. Plus, we're starting to see the state level involvement. It tends to be more the rogue states that wanting to avoid sanctions as such, but we are seeing news about Venezuela and North Korea. What would it take for a less rogue state to be involved? Maybe it's already happening. And if there is another big run and the institutions and the states start to take it more seriously, then God knows what kind of run we could see up.
Oh yeah, and it will get very, very interesting in my opinion. It's not only the rogue states; it's also states like Malta or Estland or Portugal and Europe that are really pro Bitcoin. So I guess there will be some sort of competition among governments for passports and inhabitants. And you can have governments that are very much against Bitcoin or even ban Bitcoin. But that only means that brains and money is going to leak from that country and go to the more progressive countries. And I think the speed at which this is all going is much underestimated. Because if the stock to flow model is even somewhere right, even a little bit right, and we will see the predicted levels next halving and the halving after that, we will hit $1 trillion plus market after 2020 and 10 trillion dollar markets after 2024 halving. And those are numbers that are big enough to make a lot of governments very scared. Even the US monetary base is only 3 trillion US dollars. So I think we will get very interesting times, also very bad times once in a while with bans and legal action. And we haven't seen nothing yet. That's what I think.
I think it could be crazy. And another thing that I've also found very interesting is there are previous detractors who have now flipped. And you've also got gold bugs and also macro speakers who are very interested in Bitcoin. I really enjoy Raoul Powell's take on it, and he's been on my show. And also Dan Tapiro recently, he's been talking a lot more about Bitcoin, and he's a gold bug. So that kind of flip that's starting to happen with people who are seen as experts in the macro economy and also experts in gold, that flip must also be something that's going to start to convince people. If you then fold into the fact that the global economy is fragile right now, if we do start to see a currency collapse, you will see millionaires and billionaires, as you've noted within your document, fearing quantitative easing, fearing the effect of inflation on their wealth. And, a billionaire doesn't have to put too much into Bitcoin to move the needle.
You're absolutely right. This army of Bitcoin investors and holders will grow steadily, but it will grow. And I love to talk to Raoul Paul as well. I recently recorded a video with him. Nice. On especially this topic, gold and Bitcoin. I see a lot of old gold bugs, being interested in this digital gold. In fact, I was an old gold bug interested in gold, having gold, and turning to the new gold, if you will. And you don't have to go all the way. You can, like you said, you can hedge yourself, expose yourself a little bit to it. That would be even a prudent thing to do. And if you look at the people that Raoul Paul talks to, that is really the crème de la crème of the haute finance. Those are not the traditional bankers in some village in the Netherlands or the US. Those are the big dogs of the hedge fund industry, the progressive people. And if you listen to him, he actually says that everybody is already in. I mean, maybe not much, maybe not with the millions, although millions for those guys, but they are in and getting their toe in the water. And I see that around my friends and colleagues as well, and also colleagues and even central bank friends that are buying Bitcoin just a little bit to see what it is, to protect against, something maybe the probability is very small, but the impact is huge. So, it's what I see as well.
We just need Peter Schiff to turn now. Once he turns, I think the whole market will turn.
Yeah, good point. What I learned to do is to ignore those people. So there's people that are against it for maybe good reasons, because they have a gold business or they have something to lose. You have the haters, the trolls, the whatever. But I am not going to waste energy on those people. So I'm going to focus on this steadily growing army of interested people who want to buy Bitcoin, who want to know more, who want to run their own full node, and that's really a lot of people. So I don't bother with the Peter Schiffs and all the others.
But we do have the Bitcoin bugs as well, who are also anti-gold. And one of the things that I keep thinking is that it's not either or. I actually see a role for both gold and Bitcoin. And especially if you think at state level, I can't see states dropping gold and only holding Bitcoin. I see them adopting Bitcoin, but I actually see a role for both.
Yeah, you can argue both ways. So from a diversification point of view, you would hold both. You would hold gold, digital gold, Bitcoin, property, sovereign debt, whatever. But if you take the purest view about money and the sound money, hardest money there is, and it is a bit of a winner takes all game, because look at what central banks in the same extent as gold 100 years ago, but it totally lost its value. I think it was around 1960 that the US central bank sold all its silver, I'm sorry. So they kept the gold, but they sold the silver, everything. If you look at the stock to flow of silver, it has dropped from gold levels, 60 to 3 right now. So it's now an industrial thing used for solar cells, solar panels, electricity, and electrical equipment. It's an industrial asset, and no longer a monetary hard money that is held by central banks. And if you make the parallel, if Bitcoin will be better than gold, maybe they will dump gold as well, because everybody who has gold or has had gold knows it's a pain in the ass to have gold. It's heavy. If you want to send it, you have to transfer. You don't even know if it's real. You can't verify it. You need special equipment or trust guys like Peter Schiff. Well, I'll have my Bitcoin every other day.
Well, I think they face different risks and threats, though, because on the other side, gold doesn't have a 51% attack threat. It doesn't have an inflation bug threat or any kind of bug threat. So, and also it faces different regulatory environments. So that's why I don't see it's one or the other. I do see different people will have different kind of, whether you're a state, an institution, or an individual, you'll have a different kind of weighting of the value you give to both. And yes, to us, Bitcoin bugs who consider Bitcoin to be harder money and better money than gold will probably be more weighted in Bitcoin. Actually, I've never owned gold, not as a investment, but I don't see it being either or.
Yeah, and time will tell. I don't know. Of course, nobody knows, and we will see. It will be very interesting.
Okay, let me ask you about another thing, because I asked a question on Twitter the other day and I got derided as a moron for asking the question. But I was asking about liquidity, because one of the things about Bitcoin at times, if it's only a speculative asset, if it's not being used much, I was wondering if liquidity would change it. And, I got called a moron or whatever again. But one of the things that came out is that liquidity comes from hodling. And I still can't get my head around that, because for me, hodling changes scarcity, but for me, liquidity came from buyers. What am I missing?
I missed your tweet, obviously, because I haven't read it. But if I look at liquidity as for normal investments in my day-to-day job, liquidity is very important, but it will be the depth of the market. So is it a big market? Can I sell my stuff? That's basically what you ask yourself. I'm going to do this investment of X dollars, and how fast, how easy can I get out? And if it's a very liquid market, like US Treasury market or even the big cap stock market, that's very easy to get out. But if you're in a small market that you cannot get out, you have to be prepared to sit it out if something bad happens, some distress, some recession or something. So if I look at, for example, the Bitcoin market versus the altcoins, then you clearly see Bitcoin trades $10 billion every day in the spot market, and then a little bit less in the futures market. But those are really big numbers already. That's what I would consider pretty liquid. It's not as liquid as the US dollar markets, which is the most liquid market in the world.
Yes.
But if you look at other altcoins, that would not be a comfortable investment for an institutional investor. Even things like Ethereum or Ripple. If you just look at the daily traded volumes, those are really small. And that is what I would call liquidity.
Right. Okay. Interesting. All right. So the last thing I want to finish on you with is just observation of the global macroeconomy. And, people are posturing that Bitcoin might become a safe haven asset. I'm still not sure. Certainly, the reasons I don't think it is because I think the majority of the market is still retail. So I think if the market tightens, I think there might be a flight to dollars, even though, or fiat, because I think people fear and they probably just want money in the bank for whatever reason. I'm not utterly convinced yet it is a safe haven asset. How do you feel about that?
Yeah, it's a very interesting question, and one of the things that we don't know. So we know that Bitcoin right now is an uncorrelated asset. So if you look at the returns of the past 10 years, it is not correlated with stocks or bonds or whatever, and that's a very good thing. That looks like a safe haven asset. On the other hand, we didn't have a real crisis last 10 years because Bitcoin was born at the height of the last big recession and crisis in 2008. So we're sort of waiting for the big test, if Bitcoin is really a safe haven asset. Yeah, normally what we know about recessions and stresses is that people sell everything. They need money, so they sell everything, and all correlations break. So assets that are uncorrelated or even negatively correlated will all be correlated during times of distress. And that's also how central banks and regulators see it. So they don't count on any diversification aspect, or very little at least, in capital management. And if Bitcoin will be the asset that everybody flies to, and that people will not sell, that will be a major buy. Yeah, absolutely. So that's very interesting, especially with the recession. Well, I wouldn't say right around the corner, but well, at least a lot of indicators pointing towards a recession coming.
Well, Raoul Powell says we're already in one.
Yeah, I think that's too, but I don't want to disturb. But if you look at the interest rates turning, the yield curve inversing, and all kinds of other indicators. If you look at German car exports, yeah, the definition of a recession is 2 quarters of a negative growth.
Mm-hmm.
And of course, you only know after the fact. So especially since it takes a couple of months to get the official numbers. So usually, half a year after the recession has started, that you're into one. But yeah, I think chances are high that it will turn out to be that we enter the recession somewhere beginning this year.
My fear is how big a recession it is, though, because it feels like we've been kicking the can down the road, the quantitative easing, what happened with the repo markets. It's not stuff I fully understand, but when I read about it and I read the articles, it just feels like we're heading to something quite big and quite scary.
Yeah, could be. On the other hand, we could print a lot more money. We could put interest rates to -5%, -10%. The proposals are already there, readily implementable. So, yeah, who knows? Who knows? But there will be, in any event like that, there will be wealth transfer from people that are hedged and have the right assets, and people that are unhedged and ignoring reality. So there will be wealth transfer, and there will be winners and losers, for sure.
All right, man. Well, listen, look, final question. If people are kind of remotely interested in Bitcoin, or they've heard of it and they've not got involved, or just a little bit put off by it, what would you tell them to do? What advice would you give somebody?
Yeah, I would read the white paper, because I think that's very readable. That's where it all began. And then you read it straight from the horse's mouth, from Satoshi Nakamoto. After that, I would read a Medium article called "The Bullish Case for Bitcoin."
Yeah, by Vijay Boyapati.
Exactly, it's a masterpiece and a must-read in my eyes.
We made a show about that.
Yeah, and after that, if you're still interested, also read the book "The Bitcoin Standard" from Seyfedin Ammous, which is really which has everything in it. And then, if you're ready. And don't get me wrong, this is not financial advice or anything, but if you're ready and you find it interesting, just buy some. Buy $20 or $100 or some amount that you're prepared to lose. Just pretend that it can go to zero and you lose it all. If you can still smile with that thought, then by all means do it. Get your toes wet and just start. And that will be the best learning school, because if you have skin in the game, my experience is you just read the things a little bit better, you understand it a little bit better, and then maybe you can, over time, if you like what you see in your small investment, you can expand that, and what that's called, it's dollar cost averaging. So you could, for example, say put in $100 every month, and that would be a really safe way of not buying at the top. Of course, you will also not buy at the bottom, but you will have a very nice average price, and history shows that's an excellent way of moving into something you're unfamiliar with.
All right. Well, listen, Plan B, thank you for coming on the show. Really appreciate it. How do people follow your work?
I'm on Twitter, Plan B, at $100 trillion. Yeah, it points towards the ultimate market cap of Bitcoin that I envision. But
what's the date for that?
According to the model, it will be somewhere between 2028 and 2032.
Okay. Should be entering retirement about then, so that'd be good.
Yeah, and my DMs are open. So if you have any ideas, any questions, please ask me. I like the interaction. I like all the questions. Yeah, I'm here to learn as well. So please reach out.
All right, cool. Hopefully sometime we'll get a beer in person.
Absolutely.
All
Thanks for
right,
having me, man.
No worries, man. You take care. All right, then. What did you make of that? $55,000 Bitcoin income in. What do you think? Who knows? But I do find the theory behind figuring out the scarcity of an asset very interesting. And talking to Plan B, you can't help but get pretty excited when you hear some of the numbers he throws up. You know, I've not really cared about price too much over the last year as I've moved from being a rather crappy trader into focusing on the podcast. I've kind of gone with a much more long-term view. Got my time preference in check. So yeah, I don't really check. I mean, obviously a $55,000 Bitcoin would be pretty amazing, but the most amazing thing is the press that we'll get and the news and hopefully the spread of Bitcoin. I am also not 100% convinced just because the model predicts it. There is obviously no guarantee. We do not know how hodlers will react. Will they start selling off when Bitcoin gets back to 20,000? I also think there's a psychological barrier at such a high price, but we will see. It's all really interesting stuff. Obviously, Plan B's day job is working as an investor, working with institutions, so it's great to get his input on this, whether or not these institutional investors are getting involved and why they've been slow to pick this up. You know, looking at the backed volumes, they're pretty lame, really. You know, maybe this isn't an institutional play right now, or maybe they're going to come in much later. Who knows? Anyway, listen, thanks for listening. You know, if you've got any feedback, you can hit me up on hello@whatbitcoindid.com. Also, thanks to everyone who supports the show. You know, coming up to 2 years now, and it's been amazing what so many people have done, from the sponsors to those who listen, share, leave reviews. If you do enjoy the show and you want to support it, please do head over to my website. It's whatbitcoindid.com. Click on the support section. That will explain everything you can do. And as I mentioned, I'm off out to the States on Wednesday. I'm going to be in Ohio for a couple of days, and then going to be in Portland, Oregon, LA for CIS, a little day in San Francisco in between, but that's pretty tight. Hopefully heading out to Berlin for the Lightning Conference and then back to New York for the Human Rights Foundation. So busy times, but hopefully I will get to hang out with some of you. As ever, you got any questions, reach out to me. It's hello@whatbitcoindid.com.